Well, good afternoon. Welcome to the last part in our series of conversations that we've been having called Survive and Thrive. These are a series of discussions that have been shaped to talk to the challenges that businesses face during the COVID-19 crisis and after the COVID-19 crisis. My name is Dumisani Ngala. I'll be your moderator during the session, and these sessions are brought to you by Telco. I'm very happy this afternoon to welcome a very illustrious panel of participants today who are going to speak to business about the financial imperative for survival post-COVID-19. We've got very experienced experts this afternoon, and I'm very excited for the discussion that we're going to have with them. I would like to first of all introduce Gilbert Gumbo, who is an asset manager, who is the asset manager at Nyaradzo Group, followed by Saul Chinanga, a digital banking expert, Chieza Makwara, who is the managing director of Charlie Stevens International in Zimbabwe, and last but not least, the illustrious Mr. Nkosinati Ncube, who is the head of Finmark Zimbabwe and the SADC program manager of Finmark Trust. Good afternoon, gentlemen and one lady. Good to have you on the program, and thank you so much for joining us.
Thank you.
Thank you.
Fantastic to have you here with us. So as has been our tradition in these discussions, we want to invite the invitees to please go ahead and chat with us, ask your questions in the Q&A, make your comments as the panelists present. So to kick off this discussion today, I'm going to start by asking Nkosinati to maybe set the scene for us by talking to us about what are the current financial services models that are at play, or when I say current, really what I mean is pre-COVID, because obviously there's a lot that might have changed since this whole COVID-19 situation has gone underway. So maybe can you set the scene for us? What are the current financial services models that have been at work in the market, in the industry?
Thank you, Tumi. So maybe just to focus on the financial services industry and to narrow it to Zimbabwe. The financial services industry really in Zimbabwe has been more on the formal side. The reason why I'm underlining the word formal is because as we go post-COVID, you realize that the new normal will not be normal or formal for some time. So in Zimbabwe, you find that the financial services industry, which we are primarily interested in, there are quite a number of stakeholders that are there. But if we were to pick one, for instance, we look at retail banking, or the one that has been serving the masses, you will see that it has been a very formal industry which is channel based, and the primary channel there has been the branch, which was the branch banking, and people know banking by virtue of going to the branch to say I'm going to the bank. So that has been one key primary one. But obviously, internet banking, mobile banking, mobile money has been coming there. But if you look at the corporate side and the private banking, relationship management has been the key. So if you look at the branch banking model, this has been talking to the person to person, where people go in and interact. But now with the coming of social distancing and the issues of the ministries of health, the health industry, who coming into play, you will find that there will be lots of regulations that will come into the branch, into the way people interact. So that's one red flag that will be affected. As is now, as we speak, you'll find that almost all the banks in Zimbabwe, they've opened a few branches. Most of the branches are not open. And there's an issue of costs, which is coming in there. So keeping a formal infrastructure going forward in the financial services industry is going to be something that will invite quite a discussion, and most boards will spend a large expense of time discussing as to which branch to keep and which one not to keep. But in line with branch banking, there's always been agency banking, which in Zimbabwe it also picked up. And this is what fueled mobile money industry in Zimbabwe. So agency banking is also not going to be spared, but most probably that's what will save the day for most banks. So it means that even some banks that kind of frowns at agency banking may need to start looking into it. But in terms of one of the key aspects of the financial services model is that banking of late has been driven by technology. So the speed of adoption of technology is what will save some banks, and it's what will sink some banks. So those financial services providers or in any industry, those that will find it easy to adopt technology may survive. But then technology also, or maybe COVID, what it did is it forced all of us to adopt technology very fast. So discussions that had been going on in various companies to say, can so and so work from home or not? That was forced upon all of us, where though some corporates were still looking into it, brooding over it, but all of a sudden we're all to work from home. So the technology aspect, technology innovation, the type of products that we have now, most of them required people to go to the branch. If you want to open an account, you'll be told to go to your branch. You had lost your debit card, go to the branch. You want to change the details on your form, go to the branch. So that is being challenged. Be it you're in the insurance industry, banking industry, the capital market, the mobile money business. So what now is being called for is to say what type of technology or product can be developed which will not require people to go to the branch. The other key important element is where I say it, the current normal or the old normal in Zimbabwe in particular was that banks or financial services providers were favoring people in the formal sector. So if you were to go to any bank or any insurance company, one of the things that you'll be asked is to say, can we have a copy of your payslip? Post-COVID, you will find that very few people will have a payslip. So companies need to look at that and discuss that and see how they survive. So the processes that financial services providers are now going to be challenged in a big way, and they need to be looked at by using technology, by now accepting artificial intelligence, data science, data analytics. Even when we are lending or giving somebody money, gone will be the days when you ask for a formal payslip. If it's a corporate as well, you find that the informal sector will really become the new formal. So,
right.
In a nutshell, I can say technology will win, and I'll stop there.
Fantastic. I think you've set the scene for us very capably. The highlights of what I'm hearing you saying is that, first of all, the current banking and financial systems are characterized by a certain level of formality, a certain level of geographic fixation, where people have to go to a particular location in order to get financial services. And that whole business model is being strongly disrupted by what's going on with COVID-19, and we're going to need to adopt technology. Maybe this is a good place to pivot, and maybe Saul, you can highlight for us at this stage, what are the key impacts that COVID-19 has had on the payments industry as we find ourselves today?
So welcome to everyone who is participating on this webinar. So, the impact to the payments platform has generally been characterized by disruption of business. And it's not just common to Zimbabwe. I think this has happened across the globe. The lockdowns that we have experienced, from China to the States to Africa and so forth. Initially, these lockdowns, we thought they were just going to be about 2 weeks. And we went into, 2 more weeks. Now we do not know for how long we're going to be locked down. Of course, we have started seeing business opening up, in different jurisdictions. But coming back home to, our own environment, what has been the impact, particularly to banks? When industry and commerce do not transact, the impact is huge to banks, because banks, as you heard from Ngosinati, also rely on transactional income. So when there are no transactions, there is a big hit on the pocket. So, over the past 4 weeks to about to a month and a half, you're going to see banks and financial players taking a dip in terms of their revenues. There's also been, we also expect, some challenges when it comes to loan performances, because, for salaried employees, some of them have not been able to get their salaries, some do get their salaries, but also the performance of the individual companies that have borrowed from the banks. The effects are definitely going to be felt on the loan portfolio, as some companies struggle to pay. And we have already witnessed the regulator, Reserve Bank, coming in and trying to speak to banks to say, listen, this is a situation that we have. So therefore, when you engage with your clients in terms of loan performance, you need to look at your customers in a slightly different way from the ordinary. So it's actually an acknowledgement that there is going to be a challenge in terms of loan performance. But also, when we look at COVID-19 protocols compliance, you are also looking at an unbudgeted expenditure. Who knew that, by this time when banks were doing their budgets in November, December, January, who knew that there will be what will be called PPEs, that will be required in the banking halls. So now you find that some banking halls, they have to be restructured, they have to be remodeled so that they comply with the new protocols. And this is, taking a cost, it's a cost actually on the banks and financial players. When you look at even your retail sector and so forth, all these businesses have been impacted, with the coming in of COVID-19. For banks that have got mobile apps that are performing well, they've managed to push most of the transactions onto their mobile or digital platforms, and the benefit is that there's been an increase in the performance of those channels. But the challenge is, are we taking everybody on board when we are moving on to digital channels? We spoke, Ngosinati spoke about the informal sector, which is, are we saying everybody else is going there now? So this is the new challenge that is coming with the new order. But indeed, the impact, as I've said, is massive. From the operations to the financial, to the strategy, across the whole business model, the impact has been felt.
Absolutely. And I think, Saul, you speak very ably into the fact that there's been a huge impact on our financial services providers, and that trickles down to even their customers. Gilbert, can I ask you to speak a little bit into the key challenges and concerns that are being faced by the customers of these service providers? Because Nkosinati and Saul have spoken into the industry itself, the challenges that the industry faces, the way that the industry is currently structured. But can you speak to perhaps how the customers of this industry are experiencing concerns and challenges in interfacing particularly with this industry?
Thank you, fellow participants. Yes, I think first of all, we must mention that COVID globally has affected more than 4 million people, and with next to 300,000 deaths. And as the world is now a global village, there is a lot that is output from human activity. So when Zimbabweans who are part of the world village suddenly find that they are on lockdown, suddenly find that for 2 months or so of the year, they are restricted at home, it means first and foremost, they are not productive. When human beings get out of their homes, go wherever they are going, they are productive. So when they can't be productive, it means their incomes decline. Maybe the early impacts of COVID-19 was to restrict whatever cash resources were up in the financial services. So those financial service providers who had remote systems, e-banking systems, you could still transact. But I think the bigger issue to me is that as we are into the third, fourth month of lockdown, the aggregate bank balances are less. And I think that is the biggest challenge for everybody, with companies not running payroll or trying to restrict proportions of the usual income. So I think we have got a bigger problem than just accessing the financial service providers. We've got the problem of actually having inflows into our accounts. And when you have got the inflows, it's the inflows for customers, it's also inflows for organizations. I think I like what Saul was mentioning, that there are organizations whose balance sheets, whose income statements depend on the activities by customers. So we are in that unfortunate situation where it's not just the question of access, but it's also the question of getting inflows into those accounts and what then it does to those non-performing loans and things like that. So yeah, maybe what I must do is to anticipate your next question, which would be, what then do we do in that environment? I think we need to be cautious. We can't spend money as if the next dollar is coming as usual, as before.
Absolutely, absolutely. Chieta, can I ask you, as a business owner, Charlie Stevens is about 3 years old, has been in the market, was doing fairly well. What have been some of the key challenges, more so focusing on the financial aspects and access to financial services that maybe have been brought upon the business by, and the business has a number of branches around the country. Maybe you'll tell us a little bit, give us a bit of a firmer handle on how businesses are dealing with, you know, the current environment, more so with the financial constraints.
Right, thank you, Dumisani. So I'll speak on my business, which is in logistics, and I like the fact that you mentioned that we have branches all over at the border posts. So the first thing is, I'm just going to write on what Nkosinati was talking about how the COVID-19 impact has forced us to scale up on our digital strategies. So we are already using the digital strategies because of the because of the different branches. But obviously in Harare, where we have a lot of operators, everybody was at the office, so they'd had to go home. So how it impacted us financially was, obviously we have to equip them, you know, to work. They're in the Simra system, they need to do their daily duties, you know, they had to track shipments, they had to actually register the things. So how it affected us was obviously just trying to purchase, you know, these things, hardware for them to use, to use internet at home. And that was an anticipated cost for us. You know, we are an SME, having to equip 10 people with MiFi devices and having to load them with data. That was actually quite a big hit, you know, for an organization like mine. And I'm sure other organizations felt the same way. So that would be the first thing. The second thing is obviously dealing with the safety and the security of the staff. So equipping them with PPE. We didn't anticipate that we'd have a lot of PPE for our staff, especially the ones at the border who are constantly handling the cargo. They're constantly having to do physical examinations on the cargo. So we have to buy the shields. We have to make sure that they have tons and tons of gloves, you know, and for the past 2 months, we've been buying these things, you know, over and over. So that's taking out from our monies and that we didn't, you know, anticipate. So I think those would be the two things, but also just trying to keep everybody just motivated. What we did was we tried to give them an allowance because we didn't know how long, you know, this lockdown would take. And again, it took from our finances, but we wanted to keep our staff motivated. We want to keep them coming to work. So yeah, I think that those are the biggest impacts financially in that regard.
Absolutely, and I think you know, you speak to really key things in terms of unanticipated financial expenditures that suddenly become a business imperative, and then secondly, how to keep the staff all together, because everyone is now very worried in terms of job security and you know, financial longevity. If I can pivot back to you, Saul, and ask you to maybe talk to us a little bit about some of your thoughts in terms of the informal markets, particularly how channels for collecting, receiving, and paying, so that we keep our financial systems oiled, because I can imagine that you know, if a business isn't receiving inflow of funds, it's also not paying its suppliers, and that has a knock-on effect in the market. How should the financial services industry be thinking about servicing businesses that are becoming increasingly informal, according to what Nkosinati said?
Thank you, Domi. So basically, you will find that the channels that the traditional channels that the banking industry have put in place, you know, which is your banking halls, internet banking, and so forth. You would call them the elite channels, because your Gogo, Sekuru, and also the people in the informal sector, you know, get intimidated by these high street branches. You know, when you look at your branches in Samora Machel and places like that, they're intimidating. Let alone when you look at the infrastructure itself. So it's a very important question to look at what are the channels that are available for the informal sector. So the advent of the mobile POS, the MPOS, it's a very good solution that can be deployed in informal markets. We have seen players in this industry who have tried to save the market, through products, and I think a lot needs really to be done so that these channels are supplied to the informal sector. You will also realize that our market still has some disintermediation. So you have some informal markets that require cash. because digital payments have got their own challenges as well, which are related to infrastructure. You make a payment, the next thing, you get your product and you go. However, when the service provider checks for the funds in the account, it's not there, the transaction is reversed, there are errors and so forth. So these are some of the experiences that the informal market, has come across. So we may be quick to blame them that they do not want to use digital platforms, they want cash. But I also think that the digital platforms have had their own challenges when transactions do not, get processed. But also, as a way of promoting digital platforms, it's the charges that are associated with these transactions. And the more the charges become, the more difficult the micro, and informal markets become difficult to access these products or even utilize these products. So I think these are things that we would need to look at. The other thing that we need to look at is that our industry, as it stands right now, it's siloed. There is not much interoperability. So you find that if you have got money in this wallet and you come across a merchant who is using a wallet from another service provider, the bridges that you have to cross to be able to make that payment, it's so at every bridge there is a charge that is levied there. So the cost, therefore, of doing these transactions become very, very, expensive, especially for people that are operating on thin margins.
Right.
So, yeah. So I would recommend that, I think as the discussions go deeper, we'll look at what the financial players need to do, especially in the advent of COVID-19 now. There are urgent steps that, the players need to take so that, we move forward as an industry.
Right. So I hear you highlighting three very key things there in terms of enabling everyone to transact post-COVID or during COVID. The first issue is accessibility of financial channels. I'm hearing you saying that they're not as accessible to everyone. In fact, to use your words, you're saying that the banking industry calls them elite channels. So we need to somehow make them not elite. Then they're costly to access. And then thirdly, they're very siloed, and one wallet doesn't speak to another wallet, which becomes a key problem in smoothing the flow of transactions. And of course, Nati, maybe you can jump in here and actually speak to us about how difficult or how easy is it? You've worked in the payments industry, you've worked in different kinds of mobile payments, and mobile has been said to be the answer. How much is it an answer?
No, thank you. I think one of the most important things for us to answer that question is to accept that COVID has left people
Sorry, Nkosinathi, we seem to have had a glitch or two with if you don't mind just starting again. We seem to have had a glitch or two.
Okay, no, sorry about that. So the key issue to note is that right now, most companies and individuals are not as liquid as they were before COVID. So one of the easy things to do sometimes is to start to profiteer from many businesses to say, let's cover up the gap. But I think what is very important for financial services providers to do is to accept that we have all lost and they need to work and engage as an industry. The issue that Saul referred to of interoperability, for instance, in the mobile money industry, it's very important, and it has to be fast-tracked. Why that will be done is because it is one of the things that really touches on the bottom of the pyramid. It's on the people that do not have access to internet banking. So if you look at internet banking and the app, very few people have got access to it because it comes at a higher cost. But when you look at USSD, USSD then is reachable in any channel from Auna to Cholocho to Masingo, deep area, you'll be able to get that. So banking now has to work as one. So interoperability between the banking, financial services sector and the mobile money has to start working. And the guys that have been lagging behind have been the mobile money operators. They need now to also join the party and be able to see money moving across. But within those platforms, you find that the processes are very slow. The processes are still observing old rules where sometimes you transfer money today, you get it in 2 days, and that does not work in an informal market. Because where we are going to now is more informal. So informal means that instant gratification wins. And instant gratification comes with cash. But if you look at our market in Zimbabwe, we don't have the notes. So we then have to continue to rely on the digital platforms. But those digital platforms across the board, they have to come at a normal cost. So we talk of financial inclusion, where Zimbabwe made so much gains on financial inclusion, where people that never had accounts 5, 10 years ago were now able to use accounts. But then because now most of these people will not be earning an income, what it means is that so many accounts will easily become dormant. So even from a financial services providing perspective, the rules have to be changed to say, when do we flag an account and close it and say it's dormant? The way people get salaries, it will no longer be the 30-day window or the weekly window. So all those things will change, and which is where now the key aspect is to bring in technology that looks at the risks, weighs the risks, but come up with a solution, not weigh the risk and throw it out. So the solution will be to say, where traditionally you used to say, can you give me your proof of your salary or your pay slip? You use technology to see how this particular individual is used to having money come to their wallet or whatever channel it is. So I think in a nutshell, the adoption of technology, the change of the banking processes as we know them, the interoperability of the financial institutions, all that with the issue of lowering the cost. Because if you look at Zimbabwe, one of the key issues that has been affected is international remittances. There's a huge population in Zimbabwe that relies on international remittances from South Africa, UK, US, Australia, those being some of the key corridors. So, and those people that have been pushing funds are people that are in industries that have been directly affected. So what it means is that the money that will flow to Zimbabwe will be very low, and most people will not be able to liquidate their account or even to earn a living. So that calls for change in processes and also for making banking easier and for making sure that it comes at a lower cost. Thank you.
Yeah, absolutely. In fact, you mentioned some really good points there in regard to joining together two industries. I heard you talk about the formal banking industry being joined together somewhat with the mobile industry, which is a whole totally different industry, and whether we've got the policies in place to ensure that happens to smooth this issue of the friction of money that moves for people. And then also talking to the mindset around us not thinking about profiteering, but rather absorbing the losses and moving forward as one industry. especially as it comes to addressing the bottom of the pyramid, which mobile very ably does. Now, I want to ask a question and direct it to Chieza as a business person who receives remittances from all sorts of channels. Saul talked about the fact that in the informal sectors, cash seems to be a favored way of receiving remittance, and I see business people being more excited about, there's a different tiers of excitement for different kinds of payments. Maybe speak to us as a business person in terms of your appetite for the different kinds of money, and what would make it more appetizing for you to receive digital remittances in the same way that maybe cash would be a favored way of receiving the remittance.
Okay. Thank you, Jimmy. Digital remittances have been a thing in the logistics industry because obviously it's faster to transact, and when you're dealing with organizations like the regulator, like ZIMRA, it's a lot faster for somebody to just transfer into your BPN or into their BPN and you do what you call a entry. So obviously we are happy with everything being digital. It cuts our time, you know, when it comes to the workload. International remittances obviously help everybody, us, the customs clearing guys, but also the importer, because they have to pay for their whatever they're importing, you know, internationally. So yeah, we definitely applaud that. We definitely want more of that. It would be great if we minimize going forward the time spent in the banks. But I do appreciate what Saul was talking about when you were talking about, you know, the elite bankings and the go-go's who still want to go physically to the banks. But for businesses, I mean, digital, we are 100% into that. And I think it's great. And another thing I just want to add on is even just the legislation that states that when you're doing a payment into ZIMRA, you know, there's no 2%. I think that's very important as well, because, you know, you're not being charged you're not being charged extra for goods and services, you know, for transferring into ZIMRA. I think that's 100% good. I applaud the government for bringing that through, and the regulator. Yeah, that would be my.
Fantastic. And I think what you bring into stark relief, Chieza, is that there's formalized businesses probably already using those channels. And the digital channels are working for them. Probably what their plea would be is to make them slightly cheaper. But you know, the informalization. Mr. Kumbo Gilbert, can you speak to us a little bit, because I know your business, the group faces both business, but it also faces the go-go's and the, you know, the less formal side of the market. Perhaps give us some insight into some of the thoughts that are going into how a business like yours would continue to service a market of people that are largely still very informalized and not digitized.
To me, I think I'm fortunate to speak to maybe 3 classes of business. To speak to the very corporatized business, and then of course the other side of the business. May I just say, on the corporatized business, you can't have a conversation on money without mentioning the regulators, particularly on the foreign exchange situation. I think we have seen the attempts at an interbank rate, and we've gone and seen the Reuters rate, and then of course we've seen the other rates that apply that we have alluded to. When you have got translation of transactions at those rates, it means a huge difference. So at some point you would have to address what the exchange rate reality means for business operations. But for those customers of ours in the informal sectors, in the rural sectors, where we have had policies like funeral policies based around the sobukus, This whole thing about COVID is a major nightmare because you want to be able to access mobile money, first to load one way or the other. When you cannot move, then it means that your funeral policy, for example, is in jeopardy. So that is a major hindrance. And going forward, those agents in the rural areas, they're a big player in that financial inclusion. It is really sad to have products that would be dependent on you being able to keep them going by making those regular payments, but you don't have the platforms in the rural areas. And what are those platforms talking about? They're talking about your products. What are your products? We are in the agricultural economy. You need to sell your tomatoes in Domboshawa. And if you're on lockdown, you can't get them to Mbaremsika. And that is the major challenge that an issue like COVID does to society. Your whole income streams are disrupted. So I think going forward, we will have to think as financial services players how we access and facilitate the conduct of business for people in those lower echelons of society.
Absolutely, absolutely. And I think that it sounds to me like there's a lot of thinking and regulatory mechanicking to be done in order to smooth the flow of finances for the less formalized sectors of the industry. The time is running away so quickly. We really are into our last few minutes of the webinar. And at this point, I'd really like us to start looking at key recommendations that we'd like to cast both at the financial services industry as well as to businesses that are like Chiezas that are trying to find strategies for survival of this COVID. Each of the panelists to maybe give us their top 3 recommendations that they would like to give to the financial services industry or to the business industry or to both. Maybe you can separate them by the particular category that you're talking to so that we know who you're giving that recommendation to. So maybe, Chiez, I can start with you. What would be your key recommendations, key takeaways for other business people and possibly for the financial services industry as you talk to them in regard to what your needs are as a business?
Okay, so I'll leave the financial industry recommendations to the experts there. I'm just going to talk about what I know. My key recommendation is I go back to the regulators, ZIMRA, AMA, everybody who's helping with the facilitation of permits and just regulation. I think it's time we go paperless, just trying to get things paperless makes things a lot easier for our industry and other businesses, because during COVID, we had to move around and try and get permits and just try and get work flowing, and it's tedious, So I think going paperless, I mean, the world is becoming digital. We're in digital revolution now, and everybody needs to just start transitioning. COVID has forced us and impacted us to start transitioning that way. So I think it's time to start where we were just lagging behind and going slowly. COVID has forced us to go a bit faster. So let's do it. We need it. It makes life a lot easier for small businesses, for big businesses, for everybody, and obviously financially.
Fantastic. George Shibama, I see you've got your hand up. Would you mind please putting your question into the Q&A so that I can point it at the right person who can answer the question? But please do go ahead and put your question into the Q&A. Maybe, thank you so much for that strong recommendation, Chieza. You're basically saying the regulatory authorities need to go paperless. They need to adopt digital in order to smooth the flow of things for businesses. Thank you so much for that. Can I pivot to you, Saul? What are your strong recommendations, whether it's for business or for the financial services industry? Saul, are you with us? Looks like we might have lost Saul briefly. Maybe Nkosinathi, while we're still trying to get Saul back on the line, would you just give us your strong relations, particularly services industry, as well as for businesses in this time?
Yes, no, thank you. I think my recommendation will go back to innovation and technology, which cuts across both business and financial services industry. I think one of the most important things for business to do is to split their action plans, most probably into three: what they want to do now, what they should do in the medium term, and what they should do in the long term. Why it's important for them to split it is because under any crisis, it's so easy to focus on the here and now and forget to plan for tomorrow. So the most important thing is for them to realize that innovation is key, technology is key. Those that don't have data scientists, data analysts, software developers should get those ones and have people, a team that focuses on developing technology and people. The other key thing is that behavioral shift. At the end of the day, COVID has affected people. So it's so easy to focus on the finance, on the processes, and forget the people. I think Chieta did mention something very interesting where she was saying they have to pay staff allowances and make sure that they're well equipped. That is very important in the business, to engage and to show empathy as a leader. Because once you do that, you find that as a business, you solve it with your team. And one is, you see that from a stakeholder perspective, the strategies have to change. Where those that supplier are struggling right now. So the models that people employ now should cut across, and you make sure that you've got multiple suppliers. If you're a supplier for anything right now, and that particular supplier maybe is no longer opening, so the models are different. The people that are coming into the industry in the next few years will be technology oriented, and to them, COVID will be inapplicable. So as we go, we have to change our processes and have very robust change management processes. Thank you. Thank you, to me. I don't know whether.
Well, we seem to have lost Dumi as well.
Yeah.
But I guess we can go on.
You're the administrator now.
I've decided to give myself the position of administrating and taking over. So maybe you can give us your recommendation, Gilbert, before Dumi comes back on.
Yeah, my take is that this whole thing about COVID-19 is really about attitudes. Yeah. I think we can't treat this as business as usual. I think the attitude must be that we must look at the opportunities that come with a stressful environment like this one. Those businesses that will regard this as a passing phase and say maybe in 2 months, 3 months time, this thing will be over. The experts are already telling us that we could have COVID for probably 2 years. So my first recommendation is not to treat the pandemic time as business as usual. I think we must have attitudes that say, let us restrategize. The first part of restrategizing is to look at whatever cash resources that we may have as limited, as finite, and try and spread those cash resources as far as possible, whilst we re-strategize. And the re-strategizing means we are going to look at our existing processes, our existing work environments, work arrangements. If we are going to have to work from home, so be it. If we are going to change platforms that we're working from, so be it. If we are going to change compensation systems from fixed remuneration to output-related compensation systems, then so be it. I think that is the biggest thing that we must fight back. Otherwise, if you are looking at the nation saying we were focusing growth rates of around 3% in GDP, now we are talking about estimates of between 12 and 15%. It means the economy is going to shrink. That is a negative growth of -12% minus. So we must be alive to the fact that there's just going to be less money flow around. What it also means is the strategies that we're going to have are those of improving productivity. So improving productivity, it means we're going to have to entrench agility. It means that we're going to recognize the post-COVID environment as a new normal. So we are going to have to refocus our cash models. If we're used to budgeting annually, forget about budgeting annually. We're going to budget perhaps monthly, perhaps weekly, perhaps daily. So those are my recommendations to businesses to survive and thrive post-COVID. Thank you, Jimmy.
Thank you so much, Gilbert. I'm sorry I disappeared for a moment there. There was a bit of a glitch with my link. I'm just noticing that 4 questions came in very, very quickly. Unfortunately, we're not going to have time. I really apologize to the attendees who asked these questions. They literally came in at the 11th hour. But maybe just to read some of the comments and assure you that we will get responses to these questions and post them substantively on our platforms, our Facebook platform in particular. But just to say that Patience Mapolisa says, thank you for this insightful webinar, and asks a question about how small businesses can access big business partnerships in this time. And I think that that's a very valid question, and we will ensure we get the response and post it to you, Patience. Fine Kumuka says, to encourage use of digital platforms and ease the burden on taxpayers, should the government continue charging the 2% levy on digital transactions? Well, fine, that's a very good question. I want to let you know that we're going to have a seminar on the 26th of May, where we will have policymakers perhaps speaking into some of these issues, and we'd encourage you to attend that one. Tafara Shoshwe says, can the panelists speak on the impact of the financial systems on the flow of products and services now and post-COVID? I think they did touch on some of those issues, but maybe some of the more substantive issues in your question, we will post on our platform. And then finally, we've got EM, who says, while financial service providers have been able to take on board the customers to digital platform, looks like the other support structures like logistics are still lagging behind. And maybe that's once again a question for you logistics operators, Chieza and Jeff Peary, who spoke to us last week. Gentlemen and lady, thank you so much. Unfortunately, we lost Saul towards the end. It looks like connectivity has been an issue all the way around today. But I want to thank you once again for sharing your insights and your knowledge. We will be sharing this webinar on our different platforms as in full video format. So please keep the questions coming, and we will keep the responses coming too. I want to wish you a very good afternoon, and thank you once again.
Thank you so much.
Thank you so much. Thank you.
Cheers.
Oh, Saul, you came back in the last moment. Maybe Saul, can you ask you to quickly give us your key takeaways before we leave the webinar.
Okay, thanks, Dumi. My apologies, the networks. But quickly, this is what I would want to see the banks, particularly banks and financial institutions doing to make sure that, this post-COVID, we move into the digital landscape. Strategically, we used to know what was, called winners take all. For now, there is no winner take all. It is called winner take some. There have to be collaboration, especially when you're looking at the payment platforms. Banks need to look at what is called digital banking and no longer physical, branches that we used to do. They also need to look at, contactless platforms compared to contact platforms, because COVID-19 will not smile at anything that is going to involve contact. It is also important that, we become, allocentric as players, and move away from being egocentric and come together. And, Gosnat spoke about interoperability in the MNOs and so forth, but there is also scope, for APIs, open APIs, and move away from closed APIs. Come on, competition is no longer an in thing, these days. We are talking of co-opetition and not competition anymore. So this is what we are looking at. And really, we need to ensure that even those digital immigrants are helped to move into the new era of the digital citizens. And we can't avoid that, but we have to look at that. And as banks move forward, we also need to look at how we can focus not just on operational risk that is affecting our business, but systemic risk, because it's not going to be about you alone when we are moving into the digital landscape, but it's going to be about everybody and everyone. We need to look also at electronic money and move away from the physical money, because the globe is moving away from the physical money into the digital money. And, we are, in the past, we used to look at predators and prey. You are the predator, you are the prey, and so forth. What is happening now is there's no predator, there's no prey, there is collaboration. And the innovation that we are looking at, it shouldn't be closed loop, but an open loop innovation. So there is a lot of things that banks need to look at. Even the attitude towards digital. What we used to say, computer, scanner computer, and so forth. And when we are speaking like that, it brings a negative connotation. We are looking at a complete change of attitude. When you are looking at the people that are driving the digital platforms, we must understand that this is the future of business. But if you allow me for just one more minute to speak to the question that Tafara Sose raised, as well as I think it was EM, about logistics, which Cheza is into. Yes. I think there is a challenge right now in that when you do payments, the logistics arm remains outstanding. I did a transaction, it was an online payment. I bought, a meat pie on the online platform. My expectation was that delivery was going to happen within, acceptable time, maybe 30 minutes and so forth. You know what? Delivery was done after 5 days. And believe you me, this is the truth. So that side, which EM and Tafara also spoke about, is a big issue that we need to work on. If you look at e-commerce in other jurisdictions, the efficiencies are actually not on payment. The efficiencies are on delivery. I think for want of time, this is something that we can talk about in detail in the future. But look, I know your time is up. Thank you so much.
That's fantastic, Saul. And the key takeaways from what you've just said is that we need to collaborate rather than compete only. And it's no longer about winner taking all, but winner takes up. I liked some of those points that you had. I think in terms of what you are saying, the logistics being the missing piece, we'll also direct people to have a listen to the Jeff Peary talk from last week, because this was explored in great detail. But what it also says to me is that there's still an opening for lots more conversation around these issues. And I think that we need to definitely carry the conversations forward. Once again, gentlemen, lady, thank you very, very much for your participation, for sharing your thoughts with us this afternoon. We are very grateful. Good afternoon.
Good afternoon.
Thank you.
Goodbye.
Bye. Remit.